All right, let's go ahead and get started. All right, so I'm gonna start off obviously on DXY, right? And interest rates tomorrow, yes, yeah, bro. Big news this week. I think is it tomorrow? I think we have some for the rest of the week too. I don't even check them, to be honest. I don't really care, but yeah, a lot of news. See, Wednesday is a big day. Core retail, I don't really care. Is there volume? What do you mean, is there volume? Yeah, Wednesday's gonna be pretty big for dollar. I don't know. I don't really care about that though. But here's the thing, right? I want to be bullish on this or bearish, right? But it's looking like it wants to reverse. But I think we're still gonna see one final push up. It's just a matter of like where and when, right? Because obviously, all right, my computer's in the way. A second. All right, so right, we acknowledged that we reacted from, I believe, a daily POI, was it? Or is it an H4? Right, it's pretty much this wick here. And then we reacted from it. We gave those intraday pushes, and we gave those essentially signs of potential reversal because of taking out the final leg there. So that was taken out, right? So I'm now looking at the immediate leg to the downside, although our full leg is there. Right, and there's a potential POI right there, but I'm not trying to trade that. I'm trying to trade with the immediate range. So because this is so messy, it's just like these wicks don't, aren't signaling much, right? And I don't want to assume a super deep retracement, right? Because super deep retracements can be super inconsistent, depending on how it goes. So there's a good chance that might not happen. Why? Because there's obviously we just wicked out there, and we can easily just do that, or we can do that. So it's like I'm waiting to see what happens in London, early London, and then play based on that. But based on daily closures and all that, it looks like this wants to start reversing, right? Even though I did sell today, I'll tell you guys why. But this is looking like it wants to somewhat reverse. But the only thing that can invalidate that at this point, right, is the fact that we've reacted from previous structure there. Previous inefficiency is probably what, like a weekly? No, 3-day. 2-day. Yeah, there we go. 2-day inefficiency right there. So it's like this already reacted. This gave the bullish break of structure, and this potentially can go up higher, right? As long as we take out that wick. But it's like if I get certain confirmations, then I'm willing to sell, right? Obviously, if we take out a previous low, right, that would show this as a essentially liquidity grab. If it does something like that, that would be super interesting to see. But we're just in a crucial point, right, where we don't know if this is going to continue retracing higher or it's not, right? Best case, we get some type of push London, or during London we get a push lower showing its hand to the downside, right, and then playing based off that. Because if we break to the upside, I'm not too interested because I'm already in a position. So it's like I'd rather just let it sit and see what happens, especially with all the news this week. But this is looking super messy, even though we have a potential corrective structure there and potential continuation. I'm not too sure what direction this will want to take, especially because of where we reacted from, right? So if we're looking at order flow, right, there, right, then if we break this, then we're probably going to reach rise. So because the order flow continuation is right there, I'm not too positive what would happen if we break this high. But obviously if we break this low, then we now have a narrative built on, which is order flow continuation, mitigation, break of structure, liquidity grab, right, retracement continuation, right? And then that makes a lot more sense. But you obviously have to play to whichever scenario plays. But anyways, right, looking at EU. Right, so before anything, right, I'm acknowledging that we are bearish, right? Even though, right, we are still bullish in terms of overall, I can't assume that, you know? Like I can't make that assumption. I have to assume based on what's given to me. So we already tried reacting once, and we even took structure, right? And then we failed. So that is a disruption of bullish order flow, which makes this potentially overall bearish, right? Which is why this is such an appealing sell, and this is an appealing continuation, because this can easily fail. And I'll show you guys an example of a pair that fails here in a bit. But anyways, right, we are bearish, took out structure, right? And then as I'm looking at my minor intraday, right, I acknowledge my high to my low has taken out structure, so I am bearish. That is the last structural range that's intact, right? No other low has created a high, no other high has created a low based on this intraday time frame, right? Because, right, nothing touched there, and of course nothing touched here. So, right, naturally I'm only trying to play inside this range. So if I'm looking at a high, low, retracement, right, for overall continuation, then, you know, I'm probably, you know, looking at a very high probable scenario. So as I'm looking at this, right, this is the last push down before move up, right, just referencing that wick, that was broken through, signaling to me a disruption here, right? So this is more like equal lows or relative equal lows, right, between here and here, because this was already mitigated. So I'm seeing this and this as relative equal lows, but because we also breached here, I see that as a disruption. So it's not making much sense to me to why we're coming up higher, right? So what do I reference? I reference a turbulence point. When I'm referencing inside of that, right, obviously inside of here, right, I'm seeing the break of structure based on this low, right, the move up, right, the retracement, and then the move down, right? So this is the last time that price came down. So it was actually a 30-minute inefficiency, right? You see the 30-minute inefficiency there, right? But when you go to the M15, right, then you see the inefficiency there, right? So this is a lot more appealing, right? Because I know that if this point breaks, there's nothing to mitigate here. So I know if that breaks, you know, it's done. Like the entire scenario is trash. It doesn't make sense anymore. So because I'm seeing this here, right, I actually tested something out this morning, right, and I actually left a limit there to see what would happen in terms of the reaction. So I didn't take the reaction execution though. Okay, so, right, if we're still bullish here, right, whether you want to consider this the low and this the high, right, I'm looking at the continuation, right, and this is a structural continuation because we're tapping structure, tapping that inefficiency, right, and reacting. So this reacted, gave a minor BOS, right, even gave me disruption here, right, signaling that there is potentially a breach of bearish order flow and that we can potentially move higher. So what happened, right, we came back, right, after the reaction, right, even though we didn't mitigate anything, right, we came back and we broke structure. So this to me is a disruption, right, taking out this low, because this low mitigated here, and that reacted, giving a break of structure, but then faking out. So this is now my structural range intact, right? And if you're looking at a potential entry, there's obviously your inefficient pricing right there with your SL up here, right? And that is, you know, a very conservative trade if you know how to read order flow. So, right, that would have been a really nice entry too, but I didn't need to take that, right? And then so from there, right, we're obviously targeting, right, lows, because obviously we're looking at this being the potential retracement of the entire leg. So I'm just continuing to the downside, and obviously with the target there 17 to 1, and it went up to 30 to 1, right? So right now that that's happened, I was actually looking to see if this wick would be anything of interest, right? But as you can see, it completely shot down, and it actually came into this wick here, right? So there's two potential reference points here. So it's weird now because it's weird now because I don't know what this wants to do, right? In terms of overall structure, right? The reason why I could see a bullish scenario is because we saw this. This is a disruption here based on this, right? This is the change of character into a corrective nature. So I see that as a full leg. So now this full leg has taken that out, right? If we're looking at the structural range, it's there, right? So now I'm looking at momentum. Looks like momentum wants to go to the upside. It's not just a matter of finding that bullish scenario. So that's why I wasn't too I was a little bothered that we took this out because it kind of invalidated the whole bias for me. But then I saw this, so it's like now we're in a very weird position, especially due to when this happened. This happened like right at 10 something. So at this point, I'm waiting to see if this is going to be the reaction that, you know, gives you a push up, because there's almost nothing else left to mitigate besides like obviously down here, right? But if we reach down there, it would need to be a very fast reaction in order for me to see it making sense going back up, and not just seeing it as a type of break of structure, correction, continuation. So I'm very interested to see what happens there, right? Last one, EG. All right, so this is the interesting one, right? This is probably the trade of the week, because literally, bro, I at least saw 10 groups saying this is accumulation, but it doesn't make sense. Like, it doesn't make sense to me as to why this is accumulation, right? Even by looking at the schematic itself, right? If we're looking at a schematic, right? If we're looking at a schematic, right, after we've seen the transition, right, from supply to demand, we see the transition, right? There should be no deep pullback here, even though sometimes you do see it, right? If you see that corrective nature and then it fails, then that to me shows like that doesn't make sense, right? Because if this was gonna react, if this was a quote unquote accumulation and this was gonna react, right, this would have reacted when it did this. But because we came down here, right, we either reached to mitigate something, right, or it's just not an accumulation, right? So now when you're zooming in, right, as I'm looking here, this is the final unmitigated candle. There's nothing below this. That would make sense, right? So as you can see, that was taken out, right? And even though we reacted and then incited bullish order flow, this is not a sustainable move because it didn't mitigate anything. So because it didn't mitigate anything, I'm now assuming this to be equal lows, right? And not a mitigation move that gives you an upside move. So the data given to me doesn't make sense as to why this should go up, right? And it went up. It went up probably for a reason, right? Because bullish diminishment, right? There's actually an M15 POI here. There's an M15 POI here, right? As you can, if you follow order flow, candle here, right here, push down, mitigation there, push down, came back to mitigate, but it didn't mitigate the actual wick there. So it's a leftover position. So we came in, right? We didn't breach through that POI, right? Signifying to me that there's a potential sign of bearish order flow, right? And as you can see here, that didn't breach. That then gave a momentum push here. Why? Because if this was going to continue higher, it would have continued higher here. But as you can see, automatically from corrective movement, we now see momentum. So it's now a disruption here. And even though we're mitigating something here, there is now a very, very slow move to the upside. And that is 1, 2, 3, 4 mitigations potentially. That's weak order flow. That's taking too many. So once we see this final push up, unsupported volume, right, I took the position off of the M5 inefficiency with my SL right above the inefficiency, right? And this is obviously aiming for the equal lows here, which we haven't hit yet, but I'm pretty sure it's going to hit. There's legitimately no reason as to why this should buy. And I mean, this is what I've been telling you guys. Like, I didn't really want to look at this because I didn't want to buy it, you know? And I've been saying that for like 2-3 weeks now because it doesn't make sense to buy it. Why are you trying to pick a low? You know, it doesn't, that's bad management. That's, you know, to me, that's chasing a trade. Why? Because you want a really nice snipe for a very, very high potential reward, or why not just get those consistent continuations, right? And actually grow in a sustainable way. So also, right, remember when we saw this, right, this upside move, right? So if this upside move that broke structure was meant to continue higher, right, then I see a turbulence point and I highlight the last wick there, the last point of interest. I think it was M15. Yeah, as you can see, M15 SC there. So you see it came back and it breached it, right? So that shows to me that there is no bullish order flow in mind, right? There is no bullish order flow in play, right? Or bearish order flow is just in control, right? So from there, I see this as a disruption alone, but then because we reacted afterwards, this is an unsustained move. It's the same thing as here, right? So that unsustained move, right, now creates a high, right, which now breaks structure, meaning that this is now a solidified high, right? So if we're looking at potential structural ranges there, right, this is now a solidified low because we took out structure, right? So immediately after this, right, the disruption, right, the liquidity grab here, liquidity grab because we then came back to clear structure, right, signifying why this and this is a structural range in play, right? So because that happened, right, you now have a narrative dictating downside. Why? Because the reaction that created that upside move, right, has broken, right? So the POI has broken. This is disruption, right? So even though we saw a break of structure here, right, it's unsustained because of the original disruption. So we now have a new structural range intact. So this is not accumulation because it doesn't fit narrative, right? 2, it already invalidated itself here, right? So this move here is unsustained. The data given to us, right, which is the bearish structure, the bearish disruption, right, the equal lows, right, creates an environment where I want to sell. So why would I want to buy this? You know, like, it doesn't make sense. Like, it doesn't make sense. And I'll gladly sit here and argue with anybody who wants to make sense out of that, you know? But yeah, now you guys see, like, why I don't want to buy this. Like, why would you want to buy this? Why would you want to buy this? You know what I'm saying? Like, it doesn't, it's irrational. You know, you can't justify it. Well, can it buy? Maybe, yeah, because we're in a discount. But if you have no confirmation to buy, but you have every reason to sell, there's no reason why you should be calling this an accumulation, because one, it's invalid. Two, it doesn't fit narrative, right? And three, it creates an unsustainable move, right? Unless you close up here somehow, right? By luck, right? Why? Because your first target is there, you know, which is why you have to stress continuations, right? I have to keep stressing with you guys continuations. If you can read structure, if you can read order flow, there's honestly nothing much else you need. But anyways, yeah, that's pretty much my rant for today. Just, I don't know. It's just crazy to me that people really can't read Wyckoff. But do you guys have any questions? Yeah, this is a very good trade. It just made sense, like from a rational perspective. It just made sense. Any questions? And I know there was a really nice GU setup that Chris bought, which is right here. Right? Disruption. Breach of order flow there. Right? SC. Right? It tapped once, then it tapped again, but it tapped once and it didn't break any type of structure, so you had no reason to break even. And that's a solid trade. 4 pips. Whoa. For 90? Damn. Yeah, man, this has been moving so weird. But that trade actually made a lot of sense. Because GBP does like those deep retracements. Deep retracement. Deep retracement. Even here, deep retracement. Reaction. Yeah, but I mean, other than that, I don't really have much to talk about. Let's see who's on the call. Cool. Does anybody have any questions? I mean, those trades make sense, right? That's all I care about. That's all I care about, is that it makes sense. And I think that sorry, I'm eating. I think the disruption concept is probably the best concept I've ever came up with. Because so in the course, right, there is going to be, so I was going to introduce with structure, I was going to introduce a continuation BOS, and I was going to introduce a reversal BOS, where the continuation BOS was just the initial structure break, whereas the reversal BOS was actually the full, you know, structure break that is necessary to create a new high, and that is, you know, the full confirmation pretty much, right? So I feel like if you introduce or converting that continuation BOS, although I'm going to leave it in there, right? Another way of saying continuation BOS is disruption, but I think the rules of disruption show a lot more clarity per se, and they really gives you an if this then that scenario. Like for example here, right? So if this was gonna reverse, it would have reversed here. This is the last logical POI, right? Why? There's an inefficiency fill there, and then there's a potential mitigation point here. So that point was breached, and we didn't even reach the wick here. So like, what is this mitigating? Nothing, right? But this somehow then creates a new high, right? That doesn't make sense, right? So it makes a new high, but then it melts. So why is this bullish? You know, even though you have the bullish break of structure there, right? If you can understand order flow and the order flow breach, then it only makes sense for it to reverse. You know, and we can call that, I mean, if you want to call like this, right? I actually learned this in school. We were talking about these things, how do I say it? It's like, I'm trying to remember, this was like 3 weeks ago. So when the data of a supposed stock does not match the price delivery, as in like, for example, GameStop, you know, when they had they have very shitty earnings, right? Very bad numbers, but they spiked up, right? That creates an inefficient market in terms of finance. So in a way to apply it to a chart, when something doesn't follow order flow, but it then still creates a new high like this, it's an inefficient market. It doesn't make sense. So it can't sustain itself over time. You know, just like here, right? An inefficient market cannot sustain itself over time, right? So you want to trade an efficient environment that is logical. But yeah, it's cool. Let me catch somebody else talking shit about school. The logical part of school is actually the interesting part. I think most professors are fucking retards, but the curriculum, if you actually pay attention to the curriculum, the logical side, it actually makes a bit of sense. But yeah, that inefficient market stuff, I'm not going to teach that. That's just something I see based off what I learned in school. But yeah, are you guys sure that you guys have no questions? Sorry about that. Teachers should learn from you? Nah. Bro, I'd get made fun of if I said I teach Forex. It already has a bad connotation. What do you think about US 30? I don't watch US 30. But if that's at all-time highs, I'm not touching that. Yeah, I'm not touching that. You see this break of structure there. But it's the same thing as EG when you saw the bullish break of structure. You know, it's like this is something you wouldn't want to sell. Just like EG is something you wouldn't want to buy. Right? But even though you're tricked into seeing a break of structure because you're thinking of reversal. Yeah, like if you've been buying this, like look at this scenario right there. And that's already 450 points. That's 4,500 pips. Like it's literally cheese. If you would have been buying this for years, if you would have day traded this for years, like, well, I mean not years, but like a year, right? If you would have just bought, you'd be up a couple six figs easily, right? Why? Because we're so stuck on wanting to see a BOS there, when in reality it's like leg, low, high, retracement, continuation. But that's way too high for me to trade, though, if I'm being honest. That's a heavy premium. Yeah, right. It's so stupid, bro. If I'm being honest, it's so stupid. Like, I don't know why we're taught that. I don't know if it's like a derivative of greed, or like, but it's like it's so dumb. Like, why do we see reversals more than we see continuations? I don't know if that's how we came up. It might be, like I said, it might be a derivative of greed. But I'm like, shit, you know? But yeah, any more questions? We're only 30 minutes in. If anybody has like a psychology topic, I got like 20-30 minutes before I want to pass out. Cool. Is everybody good? Cool. I mean, we're in the season where you're gonna see some really good trades, right? The volatility is back. We're about to be in Q2. I think Q2 will be very, very nice. I'm positive DXY would die off in Q2. Seasonal tendencies per se, right? Not seasonal, quarterly. But yeah, I guess we can end it off there.